Welcome.
Hey, welcome to Car Talk. Welcome to Questions and Answers. Thank you for all joining us today, although some of you signed up and didn't make it. I guess you're going to watch the replay. I knew a few people wanted to get the replay. So you're welcome to ask any questions. Type them into the question box if you want. We do have a few to start out with. We'll take the discussion from there today. This is a 0 CE event, so there'll be no questions. There'll be no CE certificate, but we'll be happy to take any other questions as you present them. We're hoping that eventually this becomes more of a weekly type thing, and it would be free, or I don't know, it'd be free is what we're thinking. So let's start off with Carol's question. If you're having questions logging in or seeing, there's nothing on the screen. Should just be a blue screen. You can call the office 800-943-1750. Someone will help you do this. And you know, Mark, that would be interesting if we had people call in on the phone and then we played it. We have to experiment with that, whether we get feedback or not. That would be interesting.
That would be interesting.
Yeah. Okay. So Carol Pettit was nice enough to email us a question. Carol was a retired government attorney and an enrolled agent. So I think it's these folks tend to send some of the more interesting questions. So Carol's question was, I have a prospective client who didn't file a 2006 return because he thought it had been prepared incorrectly, but he also never got it fixed. I have clients like that. How about you, Mark?
Many, thank God for them.
Right? It's right in the end. The old ones that you mailed in, it had the envelope paper clipped onto it with the address, the sign here tab. They even signed it.
Postage on it. Postage.
That one
opened, sealed envelopes with postage on them.
So IRS did file an SFR. Now, what's an SFR, Mark, for the folks at home?
Substitute for return.
What's that mean?
So
from 50,000 feet.
6020 lower parens lowercase b. 6020b allows the IRC allows the IRS to create an assessment, not a return per se, an assessment of income tax in our voluntary income tax system that ain't so voluntary. The SFR is the manner in which the IRS takes the income documents through IRPs, the income reporting programs, IRPs, the IRP documents, W-2s, 1099s, 1098s, produces a document, an assessment based on the income. It can only be either married filing separate or single based on their last filing.
Okay, that's enough SFR. So basically it's a dummy return the government can make up.
Oh, thank you for cutting to the chase.
To get you to file. Well, I don't want to. We could do a whole webinar on SFRs. So now the question becomes, he's been making payments on it, mostly through garnishments. Can we do an audit reconsideration for 2006 at this late date? Now, an audit reconsideration generally has two requirements, right? You have to have, this is from memory, I didn't look it up. You have to have not made a presentation previously, any defense, or you have to have a new issue to bring to the table that was not previously considered. But what I'm going to say is an audit reconsideration even what's appropriate here? If there's an SFR filed, you can always file a tax return.
So Jackie, my wife, and I have this little thing where we say over, and the next person can talk.
Roger will go over and out.
An audit reconsideration would not be appropriate here. Just since the taxpayers never filed an original return, you just file a 1040. I recently, because a taxpayer hired me and had communicating with the IRS and was given incorrect information to send in an audit recon, I forget what I did, but I basically did call it an audit recon, but in essence it was an original return. So I sent it to the audit recon group because there was a letter from their group, but an original return had never been filed. So I don't want to confuse everybody. Listen, you file a 1040. In this case, you would file the 2006 return. Now, you always have to look at, the benefit to the client in actually filing the return. Obviously, you're going to get a fee for preparing the 2006 1040. Match that assessment, the assessment, not the current balance. It's very important when you do these things, you know what you're doing, or at least call one of us to find out. You should get the full transcript of account so that you can see. She obviously did, Carol, because she was mentioning all these payments that were coming in, the payments from levy and various sources and refunds.
Mm-hmm.
Get the transcript of account. You match that assessment number against your assessment number. And honestly, and this comes down, it's not even an ethical question, in my humble opinion. If the IRS assessed a penalty or assessed a tax of $18,200 and your assessment is $19,010, you're going to actually harm your taxpayer by filing that return. Obviously, you want to prepare the return and tell them, listen, here's the return. I just want to give you a piece of information. If you file it, you'll actually owe more money to the government. So it is your option whether or not you want to file this return and pay it.
What about weighing too? Let's say that they owe on this. Let's say for a minute you come up with a return with a $15,000 balance and the SFR had an $18,000 balance.
Mm-hmm.
Two considerations. One, what if I only owe $2,000 more because I've been paying, but the 10-year statute is about to come up?
Okay. First of all, the 10-year statute is a statute based on an assessment, period. Doesn't matter the origin of the assessment, whether it was an SFR, an originally filed return, criminal proceeding. It doesn't matter what the origin of the assessment was. So Congress gave itself a 10-year period to collect on that assessment. We're going back to trivial pursuit here. What was the date where the IRS or Congress changed it from 6 years to 10 years? Does anyone know the date? Happens to be my son Jack's birthday, not his birth date, not his day of birth. It's the same month. It was the same November 5th, 1990 is the answer. November 5th, 1990, Congress changed it from 6 years to 10 years. Anyways, the 10-year clock, you would really have to think about filing that 1040. Now, the new return does not initiate an additional assessment. Since it's less than the other assessment, it would be an adjustment. So you would be safe filing a new 1040 showing a reduced tax of $15,000 versus the $18,000 and not disrupt or toll or continue or have a new assessment that has 10 years on it.
So we wouldn't create a new 10 years.
Correct. No new 10-year creation.
Now, what about the risk of an exam on that late filed return?
3 years. When you do, again, that is a consideration, John, as to whether or not you should file that return. And when the guy is 2 years away from it, you just gave the IRS 3 years to make an assessment. So if there's something in there, a child who's rock solid, you know, you're going from single to head of household with a child who is rock solid, you're a single mother, had custody, all that other stuff, you would, if your audit possibility is nil, as low as possible, then go ahead and file it. This guy's a trucker who made up the numbers, said, oh, that's why I have numbers, not on this ceiling, but in my offices I have numbers on the ceilings, and the people, regular people, look up while they're having their tax return done, they'll look up and say, why are there numbers on your ceiling? And I said, that's for truckers. That's for my self-employed clients. You say, well, how many miles do you have this year? And they go, I think I had, so apparently the numbers exist in the ionosphere above my ceiling. That's where people are pulling them off of. So if you had a self-employed person who did not have good documentation and you were 2 years away from this 10-year statute, there's a lot of different things going on there, I would not file that return. Just me, personally. As I say many times, and I think John supports me on this, John and I and all of us, all the instructors, the people you see, all of our friends across the United States, we are just creatures of our experience. If you had an SFR that was audited, which I've heard about one once in my career, out of thousands of SFRs, tens of thousands, I guess, I don't know. Thousands of SFARs. If you had one that was audited, blah, 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 whatever your experience, you're not wrong. We're not gods here. We are just
Speak for yourself, sir.
giving up the information based on our experiences. So whether someone wants to file a return, whether somebody feels ethically bound to prepare and tell their client, yes, you should file the last 15 tax years, I'm not going to cast a stone at you.
Now, so Carol asks a couple of interesting questions that we should, what?
Over,
dude. Yeah, you are over. So one point she asks about is, assuming that the actual return generated a refund based on the amount he's already paid in, she asks he can only get the amount for that was paid in during the last 24 months as opposed to the last 2 calendar years. Now, that's true. He could get a cash refund of anything paid in the last 24 months. But what's interesting is, let's say the refund was larger than that. The difference, though, could be applied to other assessments, couldn't it? Even though it's beyond the statute?
No.
But you hear people claim this all the time, that the nice RO did that for me.
All right. So in my career, I've had 3 mistakes.
You could call this a career? Oh, I'm sorry, go on.
We call this a life.
Okay.
This is my so-called life. In my career, I've had 3 mistakes whereby we filed old returns. Let's say a 2006 return here showing a $1,000 refund, and the person was either got the actual check for $1,000 plus interest, by the way, since April 15, 2017 or 2007, plus, or it was credited back to other periods. In the 3 of them, it did not result in an actual cash refund. All of them were churned back into credits. Of those, the only one of the 3 mistakes that I gave to a revenue officer, the revenue officer corrected that mistake, saw it, called me immediately and said, the service center made a mistake here, and I'm going to correct that mistake. The client was past the statute. Yeah, thank you very much. It didn't matter. The guy owed like $80,000 and he was going to get $1,000. We're still going to be offered.
But so a time-barred refund is a time-barred refund, and
credit
it's completely lost.
Correct. Credit is a credit is a credit. It doesn't matter. The computer doesn't differentiate. I should give you a check, or let's be nice, and instead of giving them a check, let's apply it towards back taxes. I mean, obviously, if they have an old assessment, the check down list is give back to the government first, check to see whether or not there's a state has triggered for a refund offset to the state. Again, whether there's other refund offsets for child support, for Social Security unpaid, different things like that are going to student loans. But then so the U.S. Treasury pays itself first, ideally. I have seen anomalies where the state got a check and the guy owes the IRS $80,000 and the state was owed $12,000 and the state got a check for $3,000 or a credit refund. No rhyme or reason. I wanted that to go to the IRS. So
all right. So Carol then asks she brings up an interesting point, and then I have an observation that I'm going to ask you about. In doing the audit recon, which we said we're not going to do, but maybe we're going to file an 06 return.
Mm-hmm.
Will that lead to questions about a subsequent year that wasn't filed? So he didn't file his 08, but he otherwise filed all the subsequent years. So what I would ask you is, revenue officers or ACS do a compliance check. Like, for example, if I call up, I need an installment agreement, one of the things they do is they do a compliance check and a look back. So if I've otherwise filed all of my returns at this point except 2008, what is the likelihood they're going to do a compliance check when I call them on the phone?
Well, a compliance check, 100%. Asking for 08, 0.
Well, isn't that going to be part of the compliance check? 08 is unfiled?
They'll see it, but they will see, as they've been on the phone for 8 hours that day, that they don't bother with anything that's 6 years back. Like right now in my head, I have 11, 12, 13, 14, 15, 16. Bam. So I know if I were an ACS rep and it was not 8, 9, 10, 11, I would just say, listen, 11 through 16, let's get that to me in 10 days.
And they're already filed. So in your mind, He's filed 6. What?
In my opinion, the IRS will not ask for '08.
Okay.
So the person didn't file '06, filed '07, didn't file '08, filed 9, 10, 11, 12. We want to file the '06 because it's an SFR that will result in a refund that we're not going to get credit for. But the rest of they're not going to ask for '08, in my humble opinion. Been there, seen it, been there, done that.
So generally speaking, even though they're in theory, an unfiled return has no statute of limitations. I didn't file my 1995 return. In theory, I have a problem. But you tell us in practice that it's really how many years back that a revenue officer will look for the current year plus?
No, the current year. So that's always a sticky wicket. It's 6 years. The statute, the policy statement, it's not statute, the policy statement does not get into detail as to when that 6th year started. So is it January 1st? Certainly every year after January 15th. I'm saying, like right now, I can say 16, 15, 14, 13, 12, 11. Okay? I know that. On January 10th, is it still...
Right, as the clock moves forward.
So I've actually never had an instance where I could document, and again, if it's January 10th and I'm on the phone with ACS and they ask me for 10, 11, 12, 13, 14, 15, and by the way, you have to file 16 and by April 15th, of course I'm going to give it to them. So if they ask for it, if a revenue officer asks you for a return, I have politely told revenue officers, oh, here's policy statement, P105. I have 2 that I've memorized. P105 is offering compromise. P100. I think this is P105 is the policy statement for the 6th year. P100 is offering compromise.
Can you find that when we're done today, and let's post that for everybody, that policy statement?
Mm-hmm.
You don't need to find it, huh? I don't want to see what you're doing on Facebook.
Mm-hmm. So, because you could just Google IRS policy statement 105, but so let me go back to one of the things, her questions here. And that is, because it was important, we brushed over it. Everybody, all our audience here, and I don't see any questions or comments or anything. Am I supposed to be seeing those? I mean, I saw that Craig said...
I think, well, actually, most of them are inattentive. Jennifer is the only person who gets the prize for paying attention. Everybody else is on another tab today.
Holy cow. Well, maybe they can just hear that. So, where are we? Questions down here.
Hey, hang on a second. I want to try something. Any one of you that are on right now that you have forgive me, a microphone. Would you just let me know that you have a microphone, because I want to test. There may be a way here to let people actually ask questions, Mark.
That's what I mean, unmute them. Unmute them all and see if...
Well, I don't want to unmute them all, but, if they put up their hand, we can unmute them and say, what do you want to say there, dude?
Oh, there's no hand things. Oh,
that?
Raise your hand.
It's quick to... Well, no, all the way to the left, the microphone. Click to...
Microphone and then...
No one's volunteering, though.
They're all too shy.
A couple of people were logged in and now disappeared, too.
Great.
Kim has her hand up, so let's see here. Kim, you are unmuted. Say hello.
Hi, guys.
Hey!
Oh, I love that voice. Long time.
I'm actually on the phone, so
how are
this is
you?
surprising. I'm well. How are you?
Good. You're named after my favorite pizzeria when I was a kid, La Bella. That's kind of funny.
Oh, nice.
We love La Bella Pizza here, too. So thank you, Kim. We love La Bella Pizza here also.
She has a better microphone than you do, Mark. I don't hear any feedback.
Well, thank you to Verizon.
You have a question for Mark or I today, Kim?
Not at the moment. I just kind of wanted to see if you could hear me, so.
We can. Where are you from, Kim?
Olean, New York.
Oh, right here.
Farm country.
Where my wife went to school at Bonaventure.
Oh, yeah.
Yes.
Olean, home of Bill Fox. Olean, that's funny.
I think you guys had a McDonald's.
Oh, do you know Bill?
Do I know? I was a block franchisee for 15 years. I know Bill. I know his daughter. I know a bunch of them. Yeah.
Okay, I work for them.
No, you don't. Do you really?
Yeah, I work at the block office in Olean.
That's too funny. So yeah, I owned block offices from 1991 to 2003. So
Oh, cool.
please tell them I say hello.
I will.
Awesome. Anyway, so I'm gonna mute you, Kim, and thank you for volunteering and being a guinea pig.
Okay, sounds good.
Bye now. So
So
there
you
goes,
know, if they called in, that they can ask questions.
provided they have a microphone, yeah.
Well, if they've called in, they've got a microphone because it's their telephone.
No, actually, dude, if you take a look at it, she was the only one that had a phone. I wonder if other people there don't have microphones that don't have a microphone or have one active. But either way, we'll figure it out.
We could tell them, if you know you want to ask questions, call in to the seminar, or actually they can probably do it even midway through. But I don't know if they can toggle back and forth. But
well, Craig is saying he has no microphone, so we'll have to test this. So anyway, did you want to say anything else related to what
I do.
Carol's question? Okay.
Actually, yes. Okay, so Carol's question, you brushed over it, the 24-month thing. So it is important, and sometimes it's vital, when you get I started on this, when you get the transcript of account, you know, whoa, I could do that, holy cow.
Can do what?
I just made you huge and took up the whole screen since we don't really care what the screen looks like. Okay, so one of the other reasons you get the transcripts is that so you can, if this return is a to-the-day refund request, so your 1040 becomes a legal claim for refund, you may want to literally run into an IRS office and get it date stamped in. Because if you pull your transcripts.
Hey, hang on 1 second there. All the the taxpayer assistance centers have now gone appointment only.
Even for getting something stamped in?
Pretty sure. And some of them, I mean, I've been to a couple of exams down in New Jersey these days, like Edison and some of these more urbanized areas, and they have so many no-shows, they set all of the day's appointments for 9 a.m. So you walk in there, and there are 20 people sitting there at the TAC. Anyway.
So here we are today on the 8th. If you looked in and you said, oh my God, on the 9th, well, that's not a really great one. Let's use the 13th. On the 13th, there is the 13th of 2015, there was a $1,000 levy from the guy's bank account. You are going to want to get that 2006 1040 stamped in, or certified mail, go to the post office, actually get it stamped, so that you can, what are you putting up there? Is that you?
No, keep going.
So that you can put your hand on a Bible and show that it came into the IRS system before September 13th, 2017, so that guy can just save your client a grand. Again, whether it matters or not, the guy owes $1 million, who cares? But it's very important that people understand, especially with levy situation, that the 2-year rule, the 2-year clock is to the day, and you might want to get it date stamped in, if possible, or go to a post office, overnight it, whatever it might be, depending on the fee. So that's very important. And they will get their refunds from the years that were applied there also. I mean, for the last 3 years. And I think that's it. So the answer is I'd file a 1040 with the ASFR unit. There are 2 ASFR units if you are a wage and investment. It is Fresno. If it is small business self-employed, so it's Schedule C, you're going to send it to Holtzville. So there's 2 ASFR units. You want to send that to the appropriate unit. Certified mail, I will always use certified mail when it's this sort of situation. 1 per envelope, people. So I'm sending a letter. I call ACS, and there are 7 years a guy hasn't filed. And I'm just, I know we're past our 6, but whatever. There's 5 returns that are going to be filed. I'm sending a certified letter to the IRS, ACS correspondence units. I'm going to use one letter. Enclosed, and I put real big, enclosed police department 5, parens, FIVE, 5 1040s, and I go, number 1, 1040, 123107, 123108, 1230, whatever it is, please be aware that there are 5 original returns in this package. The person reading it probably thinks I think they're an idiot, but hey, you have to make sure you identify those periods. But if I'm mailing in, the guy walks in, there's no one in the case, guy walks in the door and we're filing 4 or 5 returns, I'm going to send them an individual. My practice is individual envelopes for each one, especially for the state of New York. They want individual envelopes for each one.
Well, because the first thing New York does is they open it up and scan it, and so all they're doing is opening it, dumping it into the scanner, and the software doesn't pick up that it's another return.
Wouldn't the IRS scan everything too? It's 2017, people.
I thought they do, but apparently they scan after the fact. I understand they still manually key punch. New York State is using OCR to process the returns.
Okay. So I think we're wrapping up to Carol. You're going to file a 1040 with the ASFR unit. In this case, it seems like it's self-employed. So it'd go to Holtzville, and the Social Security garnishments, they get back to the day 24 months back, and his refunds for 16, 15. 14 is a good question. My 2 cents is you've made a legal claim and it's 2014 would be refunded because it's within the 3-year statute. Because you made that claim on time, that 2014 claim timely, and now it needs to be credited back.
If you have nothing better to do one of these days, that would be a neat case for you to write up. It would be to take one of these and do the transcript review and put it together and like have one where it's a go and the other a no-go on filing the return. Just a thought.
Mm-hmm.
All right, so Yitzhak Stern sent us an interesting thing where he's asking about penalty abatement, where first-time abatement relief isn't available. So Mark probably remembers this. I don't know how long Kim has worked at Block, but she'd probably remember this too. Way back when, you used to write a letter that said, I filed my return late because I relied on a paid preparer, and he messed up. So please forgive the penalty. And 9 times out of 10, they did what? They removed the penalty.
Oh, okay, all right.
All right, you never had that success?
No, I have. I've
not anymore, but
well, the issue is this. I have had more, how do I put this? A client who comes in the door who owes 1 tax year a significant amount and has reliance on a tax preparer, I've had 25% success. For somebody who walks in the door, relied on somebody, and they're getting $400 here, $300 there. That success rate's been more like 80%. So I'll say it's my personal experience is it's all relative. First-time abatement, but even first-time abatement.
Well, let's take one step back. So first-time abatement is a bit of a misnomer too. A first-time abatement generally means you have not had a penalty imposed, the same penalty imposed in the prior 3 years. You've been compliant for 3 years. It's also not optional. You can't save your first-time abatement. If you qualify for it, that's what they give you. You get the FTA and that's it. So I'm sorry, we're going to say next.
I was going to excuse myself to run. I just printed out. What do you have up on the screen here?
The penalty handbook. I was going to show them the IRM.
Okay, I'm scrolling on it as if on my screen so I can move your thing. So I just printed this out. So hold on. I'm going to run 4 steps.
Hey, can you guys tell that Mark shops at Sam's Club? You got that sign on the shelf there in the upper left, right? You can see Mark's office. And what's interesting too are the things he took from Jeff Gentner's house. Those pictures on the wall and that little lighthouse.
The lighthouse Julia made. So my daughter made that. I'm getting a 4-foot one for the front for the office here that Julie's making for the last year and a half. Oh, that's what happened. I got that online because my office in Depew, the former massage parlor,
Yeah.
allows us to do that sort of stuff, but does not allow us to have any other signage anywhere. And I get Loot Crate every month. I get Loot Crate, so I get neat little gadgets like this on a head that I can do something with.
We really have to discuss your use of disposable income. All right, what do you have there?
Okay, so FTA. My personal problem with FTA is, how do I put this? I'm an old school penalty abatement guy. I'm used to getting my penalty abatements the hard way. Using, like what John has up here, okay? You're looking at 20, let's do...
You want control of that? Oh, you can't move my screen anyway, even if I give you control.
Correct. So, I mean, look at 21.1. You don't actually need to look at it. It's the same. What you're looking at John's screen, 20.1.1.3.2.2.5, erroneous advice or reliance. This is what I used yesterday. So the second case I was going to look at is a penalty abatement case, because John asked me to grab some cases to go over when we run out of questions.
Where are you down there, dude? 20 dot what?
20.1.1.3.225. So under death, serious illness, fire, casualty, mistake was made, ignorance of the law, after forgetfulness, I think. Oh no, above. There it is. Okay. So I'm used to getting it the old-fashioned way, through reasonable cause. FTA, first-time abatement, has been on the books for many, many years, but it wasn't for the last 5, 6, maybe 7. I'll probably say 7 because I'm so old. Because when you say like, oh, that was last year, and your wife says, no, that was 3 years ago, that's me. So I imagine whenever FTA all of a sudden was the flavor of the month with the IRS, all of a sudden they start saying, we're going to start doing FTAs all the time. Offering it to people. When they mail us in a letter about their accountant, we're going to say, hey, we only gave this to you because of your prior compliance history, your positive compliance history. I'm not a big FTA fan because what I feel the abuse of it has been. On Facebook, there are many, many forums, many, many comments saying that I disagree with heavily. The guy's got 12, 13, 14, 15, 16. He's got 12, 13, 14, 15, 16 that he has neither filed nor paid his taxes on. He owes $3,000 on all of them. 14, dead in the middle, he owes $18,000 on. Well, I've got EAs who say, oh, I'll do FTA on 14. I say, stop the boat. Because how can it be a first-time abatement when you owed taxes for 12 and 13?
Correct.
Now, those people who swear, and again, I don't want to get into fights in a Facebook forum, or even face-to-face, and as I said 10 minutes ago, if this person's experience was that the penalty abatement unit gave them 14, ignored 12 and 13, God bless. That would be the greatest thing in the world. I could care less that their client got off. That's awesome, but don't rely on it, dude. Don't sign. What I want to caution fellow practitioners is don't sign someone up saying, "Oh, I'll get you first-time abatement on 14."
Mark, I think a lot of those myths come from a unique set of circumstances. Like, for example, 12 and 13 happened to have no tax liability one time. So they file 12, 13, 14. Oh, I got FTA for 14. Yes, because it's by default. There was no penalty imposed in the 3 prior years. That's a true statement. You had lost refunds, but you were able to get a penalty abatement,
So like the person getting a credit or a refund for a year that was filed that was past the 3-year statute, God bless, that's great. That's awesome. But don't rely on it because it's not, it was a mistake. Don't rely on federal FTA for a middle year. 12, yeah, the first year, if, again, When I get a power of attorney in 2848, I generally get the year, at least the year before. I'm not going to go for FTA. I'm not going to go, well, the guy's penalty abatement, so I'm going to get 9, 10, and 11 3 years ahead of time just so I can pull the transcripts and see if he had a current penalty. I'm just going to say to the guy, do you remember if you had penalties? A lot of the clients, if they're consistently delinquent, FTA is not going to matter. I will still do my penalty abatement letter asking for FTA every time. Practice note, always ask for FTA, no matter what. Who cares? It's one of the three. They're going to reject you. They're going to reject you for other reasons. You can hang your hat on FTA for one of the years and save the guy $200. At least you can say you saved something. You did something. So what was Yitzhak's question?
Well, basically, he had asked about advice on penalty abatement, and I half jokingly said, because I knew the answer, you mean other than getting first-time abatement? And he said, yup. So you can just imagine him saying yup. So
so we're going to do 2 hours on first-time on penalty abatement. We're going to do a webinar.
Soon.
Paid webinar on first-time abatement.
But here's what I thought was important. I think, show of hands, those of you that are actually paying attention, put up your hand if you've been to NCPI. Yeah, no hands going up. I think Christina has. She's just not. She's ignoring me.
Well,
like
Kim put her hand up.
Wife. Huh?
Kim put her hand up.
Who did? Kim never took her hand down.
Oh God.
So
I'm gonna make my questions box bigger here.
So I thought maybe that we'd start here and just tell people what the IRM is quickly, right? So the Internal Revenue Manual is the job handbook for IRS employees. It tells them what they can do and how they can do it. Most of my letters to the IRS when there's a problem start with, or somewhere in it say, by the way, you can do what I ask if you look at Internal Revenue Manual section. And I put in the section, and occasionally I've been known to print it out and use the yellow highlighter to make sure they see what I want, rather than, let's face it, they're busy, they're understaffed, and they just might not have time or might not even be aware of certain things. So I think it's great if you send them the exact information that says they can do something. So within the Internal Revenue Manual, which by the way is online, or the IRM, Section 20 is the penalty handbook.
Chapter 20.
Chapter 20 is the penalty handbook. And that has both the things they can do and the criteria necessary to do them. So I've been in a few appeals cases where they sit there and they look for, well, it says this, this, and this. What do you got for me? So where do you want to go, Mark?
On penalty abatement?
Yeah.
Okay, so my 30 seconds on penalty abatement is this. This is what I pitch to clients when they talk about it. First of all, penalty abatement is very rarely going to be the resolution of the file. As we've learned before, kids, you're going to pay all, pay some, or pay none. One of three things are going to happen in the file. There may be situations where you're in the middle of pay some and then you pay none, so it's a combination of stuff, but one thing is going to happen. Pay all, pay some, or pay none. If you're setting up an installment agreement, technically that's a pay all. If you're doing that in conjunction with penalty abatement, don't let the client push you around about penalty abatement. Focus that on the resolution of the case, which is a full payment. The person's going to pull money out of a bank account, set up a payment plan, liquidate an asset like stocks or something. Those things are what the resolution of the case is going to be. They will start saying to you stuff like, because I hear it all the time, I owe $20,000 to the IRS, right? You're going to set me up on a $400 a month payment plan. I'm not going to pay the first payment until you get penalty abatement. Now, that person, if you allow them to bully you into that position, is actually hurting themselves. Because if it takes you 3 months to do penalty abatement and it's not successful, or even if it is successful, who is paying 4% interest a year divided by the number of days? They are. So I caution clients, and again, it's a matter of experience and confidence that I can do this, but I will say to them, please understand, I will do penalty abatement. We will do it. Calm down. We will do it, but it's not the resolution of your file. Penalty abatement is something that we'll do after the fact. After some cases, revenue officers are on the file, and I have verbally felt that RO out, like, hey, what do you think about this guy for penalty abatement, reliance on the tax advisor? The guy goes, forget it, my manager doesn't agree with penalty abatements, I don't like this guy, whatever. You're like, okay, thank you. Since you only get 2 swings at penalty abatement, the frontline IRS and appeals, why throw the ball when you know the first one's going to be a miss? You can, in fact, set up that payment plan with the revenue officer, let the revenue officer get off the case, 3 months later send a penalty abatement letter to the service center. Because you already know the revenue officer, ethically or unethically, has already verbally given you the heads up that his manager doesn't allow penalty abatement, which I've heard, which is just ridiculous. They work for the same internal revenue service that I know.
Let me add one thing here. You know, what sometimes those same revenue officers look at penalties in one bucket. So, like a 6662A penalty, the 20% accuracy related penalty, has one set of criteria, as opposed to, for example, a late filing, which should have another set of criteria, yet they all look at them in the same bucket. So, go on.
So first of all, do not let the client bully you into penalty abatement ahead of the resolution, or say stuff like, I'm not liquidating my IRA until you get that penalty abated. I understand your frustration, but what if it takes 4 months and you're going to hate me for that 4 months of penalty and interest? But my main pitch on penalty abatement is this. Penalty abatement is reserved for individuals or entities, a taxpayer, who has had a situation out of their control, emphasis, out of their control, that prevented them from taking an action, like filing the return or paying the tax. They're looking for the morbid stuff in life. Death, cancer, fires, floods, hurricanes. They're looking for those things. And again, Hurricane Harvey did not prevent you from filing the return 5 years later. If Harvey prevented you from filing it in August and September, the September 15th deadline, absolutely. You know, the guy files that in November, we're fine. The guy files it in 2019, what the heck was his excuse after he put the house back together? I couldn't find the records. Okay, and again, I'm going to use, if the tax return was due in 2017 and the guy lived in Houston, I'm using that number, which is 20 dot, and you just, here it is, 2113222, fire, casualty, natural disaster, other disturbance. And for those kind of things, I call them medicals or disasters, as much, even if you copy and paste it off the internet, the state or federal disaster notification, include that with your penalty abatement letter. As John said a couple minutes ago, lead the horse to water. I had my former partner, Joe, would put the transcripts of account in and circle the penalties and interest. Now, I never did that, but Joe would do it, and Joe didn't do anything. I love him, but he had staff that did it, which, again...
This is being recorded.
That's okay.
All right.
I don't owe Joe any money, and he doesn't owe me any money, so we're friends right now. It's the best kind of relationship with ex-partners. Nobody owes anybody. And ex-wives. So for medicals, any penalty abatement that you're going to be doing, even if it's erroneous advice or reliance, and you have a letter from your accountant, return preparer, CPA, attorney that says, this you got hit by a car, this is whatever one of those is not, pain and suffering is not going to be taxable, you don't have to prepare this return, you're on disability, so you're not even going to have to file a return this year. And lo and behold, they get a 1099 miscellaneous from the insurance company, and it's like, wait a minute, they ignored it. Well, I ignored it. Of course I ignored it. My attorney, my God, my attorney told me I didn't have to file the return. So if you have a copy of that letter, that email from the law office, that's something for them to hang their hat on. So penalty abatement, when you say, and I grin, when FTA is not available, that's sort of my world. I never relied on first-time abatement. I have a client right now. It's the one I was going to show. And again, so this is my file. I'm not going to cover over, but basically this is how I organize the files. This guy signed up. He was a referral from an EA in Manhattan, one of my friends. Actually, I know Kim knows the guy, and the penalty abatement letter is I just sent it out. It's actually in my today, because it was like 46 when I woke up. I actually had a little rain jacket pouring out here. In my jacket is the certified envelope. And here's my penalty abatement letter, my 2-page penalty abatement letter here of the guy. And I put a copy of the POA in here. I keep a copy of the envelope. You know, I do the postage and everything, and I keep a little copy of everything. Obviously, up at the top it says certified mail and the dates, or the two routing, the tracking numbers. So my penalty abatement letter was for 1 year, 2014. Dear Sir, Madam, undersigned power of attorney, behalf of the taxpayer, requests abatement of assessments, IRC 6651A1, failure to file, 6654, failure to estimate, IRC 6651A2, failure to pay for 2014. You do these penalty abatement letters like you're doing a high school letter. What am I talking about?
No, like a high school book report.
Yes. You state your 3 best points. You tell them what you're going to tell them. Next paragraph is your 3 best points, and then a paragraph for each point in ascending order of priority. My first...
And you close it by telling them what you told them and what you want them to do.
Correct. God, I've been doing that.
Oh, Mark, are you there, dude? Or is that me? Your picture?
For how many years? Literally for 20 years I've been talking about penalty abatement. It's been 20 years. So then I put in FTA, the taxpayer has not had any penalties in the 3 prior tax periods, has paid all tax, penalty, and interest. He's fully compliant, has taken all caution to pay his taxes when due. So what happened was the taxpayer, I guess I should just read this, because this is in 12, the taxpayer exercised stock options in a foreign company that he owned. He required a loan to pay for the stocks and the taxes for that tax year, all of which were paid in full when due. At the time of the exercise in 12, a private lender agreed to take a predetermined number of shares as a repayment of the loan when the loan was due in 14. The person's an investment capitalist person and said, we believe in you, give me these stocks, and we're pretending I'm worth $100 a share. Hopefully in 2014 they're worth $400 a share. And in actuality, this guy got threefold. The lender got 3 times the benefit of the loan. So great deal for everybody. The guy needed the money, exercised some stocks himself, everything worked out great. Taxpayer was unaware of the liability on this complex transaction. Why would he have to pay taxes on the same asset twice, i.e. the shares already subject to tax in 2012? Unbeknownst to the taxpayer, the lender considered this a loan and warrants transaction and later disclosed to the taxpayer the transaction was, in their opinion, taxable. The taxpayer disagreed with the lender that taxation was taxable as a stock sale. He had simply given the predetermined number of shares as repayment for the loan as agreed in 12 and should not have a tax liability in 14 as a second time on the same asset. After several consultations with his accountant, these EAs downstate, the taxpayer determined that out of abundance of caution, he should pay the tax on the transfer of shares to his lender. Accordingly, the taxpayer paid to have the return prepared and the tax paid in full. So, sorry to bore the heck out of you with that, but the moral of the story is it was, for a lay person, a lay taxpayer, a complex tax situation.
Did you get the abatement?
I just sent this. It's not even in the mail yet. I just mailed it.
All right. So the number one complaint on feedback that I get from your stuff is you tell a story, you show a case, and they're like, what happened?
Okay, yeah, I got the abatement.
You didn't get the abatement. You said you just mailed it in. So, all right. So I want to go
Cool.
back to a couple of things. So Mark is right about how to write these letters, and there was a great product called Beyond 415, which had all of this content in it and had job aids to show you how to do it. If you were going to have not necessarily a representation practice, but a practice that occasionally encountered these issues, it was a dynamite resource to use. And what happened to it? H&R Block absorbed it. The company went away. It was a private equity owned by a private equity firm. They sold it to Block. Of course, we saved all that content, at least I did, but of course it's now 4 years old. But for those of you that have Checkpoint, Checkpoint has the IRS response library, which quite coincidentally looks a lot like this content that came from Beyond 415. So there's stuff out there, and Bill and Gene, what's Bill Gates, right? What's Gene Gates' husband, Brian? Brian and Gene Gates, for about $75, have something called the Ultimate IRS Communicator. I think Ultimate is pushing the envelope, but it does have a large amount of letters in it, and it's probably worth looking at it. And I know AFTPS resells it if you were looking to get that. But I want to draw your attention just in writing a letter. So Mark's got the right format. Personally, I think you, like Joe Cipolla, I think I want to attach, in addition to my IRM that shows you can do what I want, and I reference the IRM in the letter, I put in my powers of attorney, and I reference the powers of attorneys. Why should they have to go look it up in CAF? And then all of these things I want done, I said, see Exhibit K, see Exhibit L, as I've attached all of these things. So I want to direct you back here, and Mark will help me with this. So in the Internal Revenue Manual, follow what I'm doing on the screen here. So under Unable to Obtain Records, it says you have to establish taxpayer exercised ordinary business care and prudence. Okay, hold that thought. Under Mistake was made, it's in here too. Oh, not keeping with the ordinary business care and prudence standard. Erroneous advice. I believe that's in here too. I'm not finding it. Ignorance of the law, ordinary business care and prudence standard. Forgetfulness, ordinary business care and prudence standard. So I won't go on more with that. So Mark, do you agree that that's become a large block with our friends, that they refer back to that and say you fail because you didn't meet that standard?
Yes, yes, okay. Absolutely. Of the penalty abatement letters that I've had that were not successful, they will say to me, and I'll paraphrase, and this is the punchline: you were healthy enough to earn the $100. Why should you not pay the penalty when you didn't pay tax on $100? The person has cancer. Again, horrible situations. Everybody knows somebody who has cancer, passed away from cancer, currently has cancer, all that stuff. I'm best man at a wedding next month for my cousin, and we may be doing it at a hospital bed. So horrible thing like cancer, but the guy made $300,000 last year, and if that person didn't make estimated payments, if they failed to pay their 2016 taxes, I'm never going to tell that guy he's got a 100% chance of penalty abatement, because there are situations where the IRS will throw it right back in your face saying, if you were well enough to function and carry out your regular business transactions, you were well enough to pay your taxes and meet your tax obligations.
Let me add one thing there. So here's where we're better than TurboTax. The IRS agent is going to look at the AGI and see $300,000. What you and I know is that, well, maybe that $300,000 was deferred income and a bonus and sick pay, and he got it all in January of that year. And you can argue, well, I wasn't well all year. I wasn't well at the time the return needed to be filed, but yes, I did get that $300,000 at the time I became officially sick. You need to look at the facts and circumstances to see if you can, and knowing that that argument's going to come up, you can rebut it and say, although it appears I earned $300,000 this year, I received it in January of that year when I was determined to be ill and blah, blah. Anyway,
The
sorry.
big thing, what John just said is totally accurate. A big thing on penalty abatement is a timeline. If you could show something as dumb as the guy was a truck driver, he still grossed $300,000, but here's his January, February, March, April, and June 2nd he was diagnosed with cancer, and his income in May, June, July, August, September, October, all the rest of the year was $10,000 a month instead of $50,000 a month. Those are the things that you put into a penalty abatement letter ahead of time because you've listened to the John and Marc show, and you see that you want to follow the timeline, and you want to ahead of time take the wind out of their sails for a possible rejection based on the guy was well enough to earn money. He wasn't in the reality. There are times, obviously, when that isn't the truth. I've had a significant number of illness people who say, my wife, again, this is morbid stuff. My wife had cancer and she died, and I just didn't think of anything. I can't even imagine that circumstance. So a child dying or sick, ill, and dying. My brain, I may walk into the office and hit some buttons and be able to be functioning, but I imagine a lot of things are going to fall through. The rent all of a sudden isn't paid, or whatever isn't paid. I understand that. You've got to try to make the IRS understand that and put it into a timeline. There are cases where the person did actually function during a horrendous situation, came in, paid the bills because they needed health insurance, because their child is in a hospital, because their wife is in a hospital, because they're in a hospital. They needed to pay co-pays. They needed a new liver in June and needed $50,000 or whatever it is. They needed to come to work and make that money, but you can see the IRS's standpoint that there was a continuous flow of business throughout the year, if that's the situation. So I like John's point about putting the timeline in there and try to see January, February, March what the income was. There was January was a huge bonus, and again, if the person's self-employed real estate agent, they had a huge sale in January. They did something. Maybe they have a whole mess of people. There might be a situation where that person doesn't even have to come to the office anymore. They have 6 people underneath them who are selling houses, but it all comes through their brokerage, whatever it might be, and estimated payments fell through the thing. I had one of my penalty abatement letters that I do have the resolution to. Classic guy, Rochester manufacturing plant, second generation plant. Never missed a single tax deposit. Guy falls and breaks his hip. His wife.
Oh, Mark didn't pay his internet bill this month, did he?
Takes over for the time that he pays. I think hip. Nowadays you're back at 2 o'clock for lunch. After lunch, you're back and everybody's fine. But the point is, the guy came back and said, "Why do we have all this money in our bank account?" Because his spouse did not know that they had to pay taxes. None of the 941s were made. This taxpayer identified it that week, paid every single tax deposit immediately because he had all the money in the bank. Then, when the notices came, paid the penalty and interest. He did a penalty abatement letter, and it was a slam dunk. He had proof of the health, the time when the tax deposits weren't made, correlated to when he was in the hospital. All the taxes were paid. Subsequently, all the penalty and interest were paid, other than the fact that he would be first-time abatement. I hate to go back to that, but he would be first-time abatement anyways. He was successful in the penalty abatement based on medical, on the one that I just read from John, or the one before it. Death, serious illness, or unavoidable absence, 20113221, right above it.
Hey, I want to ask you one thing. In that the abatement letter on the guy with the foreign stock, and we really should discuss whether you did all his foreign reporting that year too. You asked for abatement of the estimated tax penalty. Do you frequently get that abated? Keeping in mind that's really interest, but
right. The short answer is no. I will ask for it because it was on the transcript. So when it's on the transcript, it's right in my face. I'm not going to not ask for it. Failure to estimate is a sticky wicket. I've never, let's put it this way, and this is just totally off the cuff. I've never got rejected on just failure to estimate. My penalty abatement letters seem to be all or nothing. I either get everything, and I don't, you got everything out, or they never parsed out. We gave you for the medical failure to pay and failure to file, but we won't allow failure to estimate. So I guess my question is, let me reverse that. My answer is yes. Of my successful penalty abatement letters, I've gotten failure to estimate also removed.
Wow.
And penalty abatement, I will give people generally a percentage. I'll tell them what I think. In my agreements, as I said last week, I will make a penalty abatement request. I will not say I will do a penalty abatement. I will produce a penalty abatement letter and make a request, is what I say in writing in the initial retainer agreement, initial fee agreement. I will ask for a percentage of savings on those. I know there is some, we were talking, John and I, and some of our colleagues were batting it back and forth on Circular 230. The spirit of the Circular 230 prohibition for a contingency fee was for you, the return preparer, to make money off of your own mistake, fixing your own mistake. The ethical, when I have not prepared a 2014, this guy, I never met him. I talked to him the first time last year. I wasn't there in 2012. I wasn't there in 2014. I wasn't the person he came to for advice ever, except for right now. That person, I'm not making a percentage of savings off of. So that letter, I charge the guy $950 plus 10% of any savings for a maximum of $5,000. Because this penalty and interest was $197,000 of penalty and interest. 43 of that was interest, so he's not going to get the interest back. However, since interest is calculated on interest, and interest is calculated on an unpaid penalty day by day, when the guy gets $154,000 of penalties relieved, retroactive to 2014, there's going to be interest. So even though you can tell clients, oh, penalties statutory or interest is statutory, the IRS is not going to write it off, and then they get their successful letter, which generally people aren't breaking your chops when they've got a good letter on them, but they'll say, oh, failure to deposit penalty, failure to pay penalty, failure to file, whatever. These penalties are reversed, and interest. Well, Mark said there wasn't going to be any interest on it because interest is statutory. The fact is that since these things happened back in the failure to file penalty happened for 2014 back in May, June, July, August, September, the 5 months after April 15th, 2015, and interest started calculating immediately upon those amounts. When you go reverse in the computer, the failure to file penalty, that retroactively the interest is going to be refunded. So this guy's going to get it. I'm praying this guy gets a huge refund check. For this guy, I told him he has a 60% chance of success. Out of pocket is going to be the non-refundable $950 that I charged you, and the guy's a multimillionaire. I told him in the conversation, the EA didn't know what to tell him. I told him you got to pay that $197 now because it's just going to keep building 4% interest. And the guy cut it. The guy was on EFTPS that afternoon and paid the $197. I know John has a whole mess of those clients. I do not have the kind of client who's going to just go on to EFTPS and cough up $200,000 in 3 hours.
I don't either. I have the ones that could. Those are the ones that are most likely to say no. No, I want my money back.
Yeah, I want my money back.
So I want to give, these conversations were always entertaining for you and I, but I think we put some of the people to sleep. So to get back to Yitzhak's concern, so in writing these abatement letters, one, the format Mark is mentioning is exactly the format I would use. 2, you want to have your attachments. But 3, you need to write a compelling, convincing story. It has to be well worded. You can't have detail. There's detail that's not useful. That, you know, oh, my father was mean to me, or, you know, my wife is mean to me. Those things aren't relevant, but other pertinent details do need to be in there. So you want to, you know, brevity is important, but you want the sufficient details. But so all of that is nice. We haven't given you anything that you can take home as actionable. But this is what I think is the most important thing, is what you're seeing on the screen right now. The IRM at 20.11322, ordinary business care and prudence. You need to be able to overcome, think of this as a sales call, you need to be able to overcome every one of these listed objections, or most of them, in the abatement letters that you write. Certainly, I would address them. And Mark was talking about, for example, length of time. I would want to whack on the fact that if it was 2 years later after the hurricane, I would want to have some sort of story about that. It took me 18 months to settle with the insurance company. The house was condemned and the papers were in the attic. Something that's going to help their case, but don't ignore it. I mean, do you agree, Mark? You want to address these points?
I do. Don't ignore it.
We had a case, just for fun, we had a case where the 2014 S-Corp return was not e-filed. It was done on time, was included on his personal return, the return wasn't filed. So we caught it the following year when we did the return. So in the abatement request, the appeals officer comes back to me and says, well, you filed the 15 return in June, you filed the 14 return that September. He didn't feel that 90 days after catching the error was sufficient. He felt that he wouldn't give me a timeline, but he said 90 days was too much. He said if the return, well, he said if the return was done and you caught the error, it should have been filed in a reasonable amount of time, 90 days not being reasonable. And I think, here's what screwed us, I think. The fact that we had already filed 15 ahead of 14.
Well, here's the thing. You and I do this. We all, everyone on this little webinar does exactly what we're talking about here, whether it's 1040s or 1120s. You don't get alerted the moment you e-file a 15 that 14 wasn't.
No, the point is when I did the 15 return,
yeah,
we were looking at 14 in our software. When you go, hear me out. When you go into 14, it says this return has already been e-filed. Only go in here if you're going to amend it. But I said yes because I wanted to go in and look for something. Well, that diagnostic didn't come up, and I thought, oh no.
Did he? Yeah, the IRS guy didn't know. How the heck did he know this?
Because when I wrote my compelling story, he went and looked at the transcripts. Now, he probably has a disclosure issue that he shouldn't have told me what happened with 15, but he did. And the point was that we had said that we caught 14 when we were preparing 15.
Okay, all right. So you put that sentence in there. Okay. He would have never known that.
Well, I mean, what's my, in other words, I'm looking to say that my guy was prudent. We found it, we said, oh shoot, and rather than waiting for the service to send a letter, we immediately filed the return.
I know what you're saying, I agree with you. I would have given you the penalty abatement if I worked at the IRS.
You would or would not?
I would have, affirmatively, I would have.
Well, I'm sure the appeals officer, after we filed the tax court petition, will give me that. But anyway.
John, you know, we hear this time and time again out of your stories. What's the end? What was the result?
Well, what is the result is that the guy fired me, and we're going to get the penalty removed, but it's all good.
Here's there's a question here. It says related. Are you seeing that related?
I did, and I was going to, after we finished up with Yitzhak, I was going to address that. So let's just wrap this up. I mean, do you have anything else that, I mean, you want to go to the IRM based on your client's case? You want to go to the IRM. You want to make sure you cover ordinary business care and prudence. You want to cover the other appropriate section for which you're relying on for relief, and you want to write the letter as Mark and I are telling you with the what do I want to do, my 3 salient points, my 3 paragraphs, and then tell them what I want them to do in closing. Love,
And support.
I'm a preparer. Yeah.
Love, John.
Or Mark. All right.
Actually, it should be your name, right? You should be telling them they should have their name.
Yeah, and this needs to be 2 hours with a couple of examples maybe. So the question that was posted is more of a comment, but I think it's kind of cool. So related to today's news, if Equifax says I may have been affected by the data breach, should I go ahead and file the form 14035 now? The 14035, if you don't know what that is the identity theft affidavit that my identity may have been stolen, and I want to notify the IRS. And you fill out this form and you send it in with a copy of your ID. And so to answer the question, first, I want to file it now, because come tax season, how many preparers are going to be telling people you should do this? Now, in my office, we are, I can't legally use your social security number to go run it through Equifax, so I can't do it for the clients without their permission, right? That would be a violation of 7216 and/or Graham-Leach-Bliley, right? I took data from their tax return to use it for something other than preparing a tax return. But we're going to notify everybody, and we're going to suggest they go to this website, and we may have to file a whole stack of these documents. So to answer the question, yeah, I would do mine now, because I think there's going to be a whole boatload going in later, and I want to make sure mine gets in before someone can file a fraudulent return.
So your advice is to do it now for 2 reasons: volume, and the whole purpose that somebody may have stolen my identity today is to file a tax. Well, and one of the things, other than setting up credit cards and all that other stuff, one of the things they're going to use my stuff for is to file a fraudulent return and to take the wind out of their sails. I want to put myself on the identity theft radar.
I'll go one step further. Have you filed your tax return yet, Mark? For 16?
Yes, I've got college kids.
Ah, okay. Well, no, you needed to file 15 for the college kids. But
I filed them all.
I know. I can't believe you filed all your entities. I have not filed yet.
I have one left.
Okay, then I won't ask how you did your personal return if one of your S corps isn't done.
Because it's not an S corp. That's why I did it.
Oh, you have an entity that isn't a flow through? I'm surprised. Anyway,
Hamburg tax is an S corp. Is a like June 30th return.
Oh, amazing. So to answer the question, Craig, yeah, I'm going to file me this week. For example, one, because I haven't filed a 16 return yet. Not that I think anyone is looking to file a fraudulent income tax return this late in the year. But yeah, I think all practitioners that are affected probably need to file it, get an ID theft PIN, and then the larger thing here is what are we going to do for our clients beyond advising them to do this? And again, sets us apart from TurboTax as practitioners. I know people get tired of hearing me say that, but another thing we can help them with is TurboTax isn't notifying their users today.
Well, I mean, this thing for Equifax is just the people. It's not practices. It's not like you got hacked, John, or I got hacked. It was just Equifax.
But John's data is out in the wild. What are one of the things you do with your data? File a fake tax return.
Correct, but he's not notifying his clients.
All right. So 2 parts, Mark. His question was, should he file the affidavit for himself today? Yeah. I say yes. Get ahead of everybody else filing it. But then that brings up the larger question, what should we as practitioners be doing for our customers? At a minimum, we should be warning them. But probably anybody that comes up on that thing, is that the advice to file the ID theft affidavit? Yeah, probably.
Yes. Okay, got it. You're not doing that whole thing where you mail out all the letters, you tell the IRS and all that junk.
No, I don't. No. I didn't have an identity theft breach. I don't need to do that. But here's a situation where 135 million Americans had a breach. Is it possible half my clients were affected? Probably. Statistically, half my clients were.
Right. statistically.
Anybody else have questions today?
I don't hear anything.
I'm looking at the question board.
I'm listening to my microphone. I didn't hear anything.
All right, awesome. Are you speaking anywhere in the next month?
Yes.
Where are you?
So Brooklyn chapter Tuesday the 26th of September. They want me to come drive to New York 6 hours, 6.5 hours. Actually 6.5 because it's going to be Brooklyn, so the other side of New York. So that'll be for 2 hours. I'm speaking on the 23rd of September in Syracuse, a Saturday meeting that you're gonna be at, right?
We got to see about my plane, but yeah.
John and I. Then the 26th, literally yesterday, was confirmed. They want me to do it, and I gotta see if I can do it. It's just a pain.
I thought I was going there that day, but that's great if you're going there.
No, John, you feel free.
No, let's. Well, you'll get money out of them. I don't. So.
No, I'm getting the miles and the hotels. Not getting paid.
Okay.
I'm getting made whole.
You can sleep in my office, by the way.
So and then after that, I'm October 22nd, 23rd, 20. Well, actually, I'm not speaking at New York. So what am I thinking? The New York State convention.
Yeah, right.
NTPI, which, as you know, on that board that we were talking about last night, there's been some controversy there for NTPI Orlando. I will be teaching. I'm 90% sure I'll be teaching in Orlando, and after that, there's December 4th. I'm in New York City teaching for the New York City, December 4th. It's a Monday night in New York City.
Oh, for the Manhattan chapter?
Chapter.
All right.
So
you can see my speaking dates on taxpracticepro.com. I'm not invited to Rochester. I think you've been to you either, huh?
What's
Rochester? Rochester events this fall for Western.
Oh, Batavia. You mean Batavia?
Yeah.
I was feeling a little under the weather yesterday, and I had a lot of running around to do. My day has been very complicated by the construction here at Tax Help, as well as my home. So I was going to go to the Western chapter, but not speak, and I couldn't even do that because I was not feeling well. I was not feeling well. I was going to be in the car for an hour and a half, and then drive the 45 minutes to an hour to Batavia through rush hour. So it was. I wrote my check. I mailed out my check this morning to him for the the dinner that I didn't get and the CE I didn't get.
You should have come down to State College yesterday. It was quite an interesting interesting day. I'm in every state except New York. I'm not speaking at NYS's EA this year either, but I will be in. I'm in Manhattan, Brooklyn, Long Island in the next coming months. If you look on Ask Sheely or John Sheely or Tax Practice Pro on Facebook, you'll see some Frank Agostino stuff that's coming up that's free, so free CE can't be bad. To answer Kim's question, Mark and I do plan to do this at least every other Friday.
Friday? I thought we were doing Wednesdays. This is the first Friday.
We've got to work out the schedule. Wednesdays are we've been doing the ones that people pay for.
Okay.
Maybe Fridays will be the ones that are.
Oh, I get it. Every other Wednesday paid.
Yeah, the open mic stuff. So the interesting thing, Kim, is going to be whether we do this during tax season or not. On the one hand, I think there's value. On the other hand, I just don't know that A, we have the time, and B, how many folks are going to tune in. But we'll see where this goes. There are a couple of Fridays where I'm away speaking. Next Friday's the 15th. But yes, we're gonna pop up a schedule of stuff shortly. So, you got anything else, man?
Me, man?
Your man, yeah.
I have nothing else other than a wife that needs to be taken to her car after the oil change has been finished, which is I got the text, the oil change is done, so I got to go get her on her lunch break.
Well, I'm going to stop recording, and I'm going to wish everyone a happy weekend. How about you?
Happy weekend, everybody. I'm going to a mud run tomorrow morning, 8 a.m. in Swain, New York. It's a resort where they have skiing, and off season they have this mud run where you do the. I've never done it before. My soccer team does it, and every year I say I'm going to do it. Well, this year, darn it, I'm going to be hosed down by firemen and run through pits filled with mud and over obstacles and under obstacles and running and shooting things and fishing and swimming. You have to catch 16 bass before you can move on to the next hurdle.
How much do you get paid for that?
I got the honor of donating $35 to some charity.
Yeah, I can't see doing that. All right.
Now, if I did have my Tax Practice Pro shirt, I could, wear that while I'm in the mud. Free advertising, and then you could pay. As it is.
Everybody have a great weekend.
Bye.